Hey guys, how's it going? Amir here, back with another video. Today I'm going to be talking about a technical analysis tool some of you have been asking me to make a video on, and that is Fibonacci retracement levels. Specifically, how to kind of find the retracement levels when we made a big move up or a big move down, and also the extension levels where you could find places to possibly take profits and see what kind of levels will go from there. So this Fibonacci level is, kind of in every single financial market, from stocks to futures to cryptocurrencies. It's based off of the golden ratio, which is 1.618. You can find this ratio everywhere in nature, from seashells to flowers to honeybee hives, and apparently human psychology. So yeah, it's used pretty extensively in the markets and out. So today I'm just going to be looking at a couple charts, randomly going through this Bitcoin chart here, just to show you kind of ways you can look at this to trade. And so I'm here on the Bitcoin chart. I'm looking at the daily just because I like a bigger time frame like that. And so I'm just going to pull the futures in here. So usually, depending on the charts you use, it might start a different way. But on TradingView here, you kind of start right when you're looking at the move. So we're going to be looking at this swing up here. And so you kind of want to get the very beginning of it, like the lowest low, all the way up to the highest point in this move here to look at the levels. Oh, I didn't even click that yet. Okay, so when we think, a move has, kind of gone up and made its run up, we can try to see if it will probably, kind of make a little bit of a correction after, kind of a significant move up here. And so levels we want to be looking out for are these three main ones. I mean, you can just ignore this 23, the 78 for now. We're just going to be focusing on the 38.2, the 50, and the 61.8. So these are just the main levels we traders kind of look for when they're trading Fibonacci retracement levels here. So you can see here we kind of, as soon as we come back down, we test this 38.2 level. We come all the way down, just completely break through it. And I'm not even sure of the price action during the day because these are such large candles that it just made huge moves down. So this was definitely two huge bearish days here. And then we get to this third day, this big third candle here, and we see that we, touch this 61.8 level, which also happens to be this previous resistance level that we had broken through really quickly. And you see with this like big green candle here. So we broke through this level, and you kind of want to be looking for areas of confluence, and confluence is just kind of when a trend line, usually a support or resistance line, gets tested along with a fib level. So this is a good indicator that price might try to retest this level here. If it does try to retest it, a possible strategy you can use is to buy here depending on how the candle closes. I don't recommend buying into whatever time frame you're looking at, the middle of the candle, because candles can change in even 5 minutes to 1 minute. So I recommend waiting for the candle to close on whatever time frame you're looking at to get a better picture of where the market might be going. So as you see here, we have this confluence level at 61.8, and we just kind of go up. We kind of hit this level here, come back down. We try to make an attempt to touch this 50 level here, but then we zoom back up. So as you can see here, this 23.6 level kind of plays a little bit of a role since it became like a support and resistance level. I generally wouldn't look at that when you're starting off with looking at fib levels. If you're definitely more advanced, you can look at other levels for your strategies. But as you can see here, when there's a move up and it hits a 61.8 levels and really respects it, it's a good indication that we do have legs to move up on that move. Same thing with 38.2. Anywhere around here is a good indication that the move is still in the direction where it was originally coming from. In this case, it was up. It could be down, so just don't take it for going up. So 61 input level is a really good level for it to bounce off. As you can see, just kind of wedged up back higher. A possible way we could use this in terms of profit taking is fib extension levels. So let me just delete this guy and try it again. So usually you would use fib retracement levels when you have areas where price hasn't been before. This is usually the case with cryptocurrencies. Bitcoin has had it for a while. So let's see, for the fib extensions, we usually want to go the opposite way in which we came. So we want to look at this leg, start put it up the opposite way in which we originally started off. And so we kind of look at these extensions here, the 1.618, which is the golden ratio itself, as well as a 2.618 level. This is a really overextended level, and it has to be a super strong move in order to get up here. But in an uptrend, and if it has enough legs, especially if it bounced from that 61.8 level, then it's usually going to try to hit. There's other levels you can put in between here, but if we haven't had price action before in the past, these are some good levels to look at. So as you can see here, we kind of broke above this high. We attempted to test it back up here, move back up here. We broke the 618 level, but this is a possible place you can try looking taking profits if there is no previous price history before. But as you can see here, the market had reacted at this level and consolidated right above it, even testing it, going back up before breaking back down again to this area of consolidation we have over here. And of course, moving back up. So coincidentally, it looks like this is also the 10,000 level mark, which a lot of people are calling for Bitcoin to hit by the end of the year, maybe the beginning of next year. So we'll see if that holds true in terms of that extension level. As you know, Bitcoin has not had previous price at these levels before. So yeah, it's going to be one to look at. Let's look at another random example here. I'm just going to scale this back to normal, maybe. Okay, so let's look at another chart. Let me just load this. Okay, so areas where this might hurt you is when we are in a consolidation period, because if we're in a consolidation period, we're just literally moving up and down in a very small range, kind of like what we're seeing here. So you never really know when you're in a consolidation period until you're in one. So just be advised, these are not tried and true methods unless you really know we're in a strong market. So that's a big area of warning there in terms of trading these levels. However, we can, trade these levels in a smaller sense here. Let's see if we can, make some fib levels in some of these charts here. I mean, this is a pretty good one to make it in. So as you can see here, again, we want to make, ultimate low, ultimate high of like the ultimate move itself. So make sure you get those wicks, no matter how long they might be, because that is where price has moved and probably price will react to. So here's another perfect example, 2 for 2. Perfect example of a price that had come down, kind of broke through 38.2.5, but really respected the 61.8 level right here, consolidated here before making a move further back up. Let me try to find one that doesn't have a perfect one. Again, I'm choosing these randomly. I'm not really. Okay, we'll just see if we can maybe get this guy. No. Let's